Get a degree. Get a job. Buy a house. Work hard. Retire at 65. And if you followed the script, you'd be successful. Safe. Secure. Fulfilled. But what if that script was never written for your freedom, but for your obedience? Here's what you'll uncover: the hidden illusions that keep you stuck chasing what you were never meant to catch. Why the default life isn't yours, it was assigned to you. And how to exit the matrix, not by escaping the world, but by reclaiming your power within it. It's your wake-up call. No more blind following. No more borrowed goals. Just clarity, control, and a life that's truly yours. Let's start today with a phrase that sounds innocent but holds an unsettling truth: sheep shearing. No, this isn't a story about farms or livestock. It's the metaphor for how financial systems, especially in the US, strip away the wealth of the middle and lower classes in quiet, strategic cycles. And the most potent tool in this shearing process? Interest rates. The interest rate game, the beginning of the cycle. When the economy slows down, the Federal Reserve steps in with a lifeline. It lowers interest rates. This move is always wrapped in optimistic messaging. We're making borrowing more affordable. We're stimulating growth. We're giving the people opportunities. And for a moment, it feels true. You can get a mortgage at 2.5%. Car loans seem like a no-brainer. Startups pop up on every corner. Stocks rise. Housing prices boom. People feel wealthy, at least on paper. They refinance their homes. They take out second mortgages. They invest in the market. They borrow to buy more. From prosperity to pressure. But this sense of prosperity is not built on stable ground. It's debt-fueled, speculative, and deeply vulnerable to a single shift in policy. And that shift always comes once the economy starts overheating, once inflation rises or markets stretch too far. The Fed does what it's done for over a century. It raises interest rates. Suddenly, that mortgage payment jumps. Credit card bills balloon. Adjustable rate loans become ticking time bombs. Investments bought on margin crumble under pressure. People start to drown. Foreclosures rise. Car repossessions spike. Small businesses shutter. Bankruptcies flood the courts. And here's the twist. This is not a failure of the system. This is the system working exactly as designed. The cycle isn't broken, it's engineered. This is the sheep shearing cycle. First, shear the sheep softly, lower rates, lure them into borrowing. Then, shear them hard, raise rates, crash asset values, and take back the assets they bought. Houses, cars, stocks, even businesses. And when people can't pay, the banks repossess. Investment funds swoop in. Hedge funds buy distressed assets for pennies on the dollar. Then the Fed lowers rates again, and the cycle starts all over. You might think, that's just economics. But it's more than that. This is about power. Who wins no matter what? Let's be clear, banks never lose in this game. When interest rates are low, they collect fees on loans, IPOs, mortgages, and credit cards. When rates rise, they collect higher interest, repossess assets, and make money shorting the market. And even when banks themselves are in trouble, the government bails them out. Think back to the 2008 crisis. Homeowners lost their homes. Retirees lost their pensions. Millions lost jobs. But the big banks, They got government money. 0% interest. They bought up real estate, stocks, and even other banks. That's not a coincidence. That's a system. Why you don't feel it? Until it's too late. For most Americans, this cycle feels like bad luck. I bought my home at the wrong time. I lost my job because of the recession. My business just didn't make it. But these events are symptoms of a larger disease, a disease you were never told about. Because you weren't supposed to know. The financial elite, the central bankers, the hedge funds, they know how the game works. They have the data. The lobbyists. The insider access. You get the headlines, the panic, and the bill. Inflation, the silent partner in crime. Let's add another layer to this. Even if you're not borrowing or investing, the game still gets you, through inflation. When the Fed floods the system with money to stimulate the economy, the dollar loses value. Prices rise. Your paycheck stays the same. It costs more to eat, drive, live. And if you save cash, it loses purchasing power every day. You're losing either way. And those same assets, real estate, stocks, commodities, they rise with inflation. That's why the rich buy more when prices fall. They know that with time, inflation will lift the value of their assets again. But if you don't own any assets, you're just running faster on a treadmill going nowhere. The big picture. This isn't just about numbers. It's about your future. You worked 40, 50, 60 hours a week. You saved. You plan. You dream of stability. But the system is built to extract, not empower. It wants you dependent. Confused. Reacting instead of preparing. Because people who understand the game are harder to shear. What can you do? In future episodes, we'll dive deeper into how Wall Street profits from both boom and bust. Why the stock market is a tool for wealth concentration. How real estate becomes a weapon in the class war. What role the central banks really play. And how you can start to protect yourself, financially, mentally, and strategically. But for now, remember this. The sheep shearing cycle isn't your fault, but it is your responsibility to understand. Because no one is coming to save you. But you can learn to save yourself. We explored how interest rates are used like blades to shear the financial wool off the average American. Today, we shift our attention to a different kind of power player, the investment banks on Wall Street. This is the arena where the real magic happens. And by magic, I mean manipulation. The kind that turns your retirement dreams into their revenue streams. Let's talk about how Wall Street doesn't just participate in the markets, they rig them, dominate them, and profit from both sides, every single time. The myth of the free market. We've all heard the phrase, let the market decide. It sounds noble, democratic even. As if buying and selling stocks is like voting with your wallet. If you're smart and disciplined, you win. But here's the truth, Wall Street isn't playing the same game as you. They wrote the rules, designed the arena, and sell you tickets to watch yourself lose. IPOs, Wall Street's first act of extraction. Let's start with the initial public offering, an IPO. This is when a private company decides to go public and sell its stock on the open market. The banks that underwrite these IPOs, Goldman Sachs, JP Morgan, Morgan Stanley, they don't do it out of goodwill. They take huge fees. They buy shares at insider prices. They hype the market. They create scarcity. Then, once the stock goes public and the price soars from the hype, they sell. You. You bought at the top. They cashed out at the bottom. And if the stock crashes in the following weeks, that's your loss, not theirs. Margin lending, debt in disguise. But Wall Street doesn't stop there. They encourage you to buy stocks with borrowed money, called margin. Why? Because when you trade with margin, they collect interest. They collect commissions. And when the market dips, you get a margin call, forced to sell at a loss, locking in their profits. You lose your money. They get your fees. It's debt-based gambling dressed up as investing. Short selling, betting against you. Here's where it gets even darker. These same banks and hedge funds will often short sell the very stocks they once hyped. Short selling means borrowing a stock, selling it at today's price, and then buying it back later, hoping it's cheaper, so you return the borrowed shares and pocket the difference. They profit when prices fall. Now imagine this. They fund the startup. Help it go public. Hype it through CNBC appearances. Watch retail investors rush in. And then they short it behind closed doors. When it crashes, they win again. Up or down, it doesn't matter. Wall Street always has a trade. High-frequency trading, the speed advantage. Now let's talk about speed. Wall Street firms have invested billions in fiber optic cables and data centers so they can trade milliseconds faster than you. They use high-frequency trading algorithms to detect your order before it's filled, buy ahead of you, sell it back to you at a slightly higher price. It's called front-running, and it's legal if done fast enough. Imagine trying to play poker, and the dealer works for your opponent. That's what trading against these firms is like. The puppet show on CNBC. And just when you think it couldn't get worse, remember this. Wall Street has influence over financial media too. The talking heads on TV. Many are former Wall Street analysts or executives. Their narratives move markets, and guess who positions themselves before they speak? Right. The banks. They pump optimism when they need liquidity. They spread fear when they want to buy cheap. It's not news. It's narrative. And you're the audience, and the product. How they win when you panic. During a crash, most people panic and sell. But for big banks and hedge funds, it's a fire sale. They buy distressed stocks, real estate, entire companies, all at discounts you'll never see. They sit on cash during bubbles. They wait in the shadows. And when the average investor cries, recession, they quietly hit buy. It's not just investing, it's strategic accumulation. Regulatory theater. You might wonder, isn't the SEC watching? Aren't there regulations to protect us? Sure. On paper. But the real power players lobby Congress. They influence policy. They know the loopholes because they helped write them. And when they get caught, they pay a fine that's smaller than the profit they made. No jail. No clawbacks. Just the cost of doing business. The takeaway, you're not the customer, you're the exit. Wall Street isn't your partner. They're not rooting for your success. You are not their client. You're their liquidity. You're the exit strategy. They need you to buy when they want to sell. They need you to panic when they want to enter. The illusion of access, the Robinhood apps, the ETFs, the daily stock tips, is just that, an illusion. Until you understand the game, you're just another player holding a losing hand. In the United States, we're taught to believe in dreams. The dream of building a life. Of owning your slice of land. Of unlocking the front door to a house that is truly yours. They call it the American dream for a reason. But for millions of Americans today, that dream has become a nightmare, a trap wrapped in mortgage paperwork, rising rent, and generational inequality. And like every system we've explored so far, real estate has become another weapon used in the game of wealth extraction. Let's dig deeper. Homeownership, from milestone to mirage. Once upon a time, buying a home was considered a major life milestone. Your parents, or your grandparents, might have purchased a modest house in the 70s or 80s. A single income was enough. The mortgage wasn't a death sentence. A teacher or factory worker could own a home in most American towns. Fast forward to today. That same house now costs 5x to 10x more, often without a matching rise in wages. Even adjusted for inflation, housing has outpaced income in most major cities. Median rent consumes 40 to 50% of income. And young adults? They're staying with parents longer, not by choice, but by necessity. Owning a home is no longer a milestone. It's a mirage. Why housing prices never come down? You might think, if prices are so high, shouldn't the market correct itself? That's not how this system works. Because housing isn't just shelter anymore, it's an asset class. Real estate has become the preferred store of value for hedge funds, wealthy families, foreign investors, institutional buyers. These players aren't buying homes to live in. They're buying homes to protect their wealth from inflation and currency devaluation. And when there's more demand from people who don't care about price, because they're protecting billions, prices don't fall. They rise. Even during recessions. Your paycheck can't catch up. Let's put this in numbers. Between 1990 and 2023, the average U.S. wage increased about 110%. The average U.S. home price increased over 300%. Rents? Up 200 to 400% in many cities. This gap is what creates the wealth divide. If you own property, your net worth rises with the market. If you rent, your expenses rise while your savings stagnate. And even if you want to buy, you often can't. Because in many cities, you're not just competing with other families. You're competing with private equity. Wall Street buys the neighborhood. You heard that right. Since 2010, Wall Street firms like BlackRock, Invitation Homes, and American Homes for Rent have bought tens of thousands of single-family homes, especially in growing suburban areas. They outbid families. They pay in cash. And they never sell. Why? Because rent is a guaranteed monthly stream. Because homes are appreciating assets. And because once they own enough homes in one area, they can control the local rental market. This is corporate landlordism at scale. Welcome to the era of, you will own nothing and be happy. Rent, the hidden tax. If you rent, you're paying someone else's mortgage. But you're also paying something worse, a wealth tax that never builds you equity. It's money that leaves your account and never comes back. And here's the kicker, even with good credit and a stable job, many Americans still can't qualify for a mortgage, especially with today's interest rates climbing past 6%, 7%, even 8%. So what do? They rent longer. Save less. Delay families. Delay retirement. Delay life. And the wealth gap keeps widening. Generational theft. Let's be blunt. This isn't just unfortunate. It's structural theft across generations. Baby boomers bought homes at $50,000. Today, those homes are worth $500,000. Gen Z and millennials. They're trying to enter a market 10x more expensive with more student debt, lower wage growth, less job security, and far more competition from corporations and cash buyers. The system was built to reward the early and punish the rest. The illusion of help. And when things get really bad, what do politicians offer? Tax credits that barely dent the down payment. Affordable housing quotas that get buried in red tape. Rent caps that discourage new construction. And government-backed loans that end up inflating housing demand, without increasing supply. These are band-aids on a bullet wound. Because none of these policies challenge the core issue. Real estate is no longer about homes. It's about assets, leverage, and control. What happens next? If nothing changes, the future is clear. Homeownership will continue declining. Renters will stay renters for life. More cities will become unlivable for working families. And wealth will continue concentrating at the top. This isn't a conspiracy theory. It's a business model, and it's working exactly as intended. A new dream. We can't rewind the clock. But we can start by recognizing the trap. Because the first step out of a rigged game is knowing you're in one. So if you can't afford a house, remember, it's not because you're lazy or behind. It's because you were priced out by a system that never wanted you in. Inflation, the silent thief of the middle class. If someone stole 10% of your paycheck every year, right out of your account, you'd notice. You'd probably report it. You'd demand justice. But what if that same money was taken from you slowly, invisibly, legally? That's inflation. And it's not just an economic metric. It's the most underestimated, underreported, and understood form of wealth transfer in the modern world. In this episode, we unmask inflation for what it really is. A tool, not a tragedy. A strategy, not a side effect. And once you understand how it works, you'll never look at the dollar in your wallet the same way again. What is inflation? Really? We're told inflation is simple. It's when prices go up. But that's not the whole truth. Prices don't just rise out of nowhere. They rise because the purchasing power of your money is falling. In other words, that $1 in your hand today will buy less tomorrow. And less next year. And even less the year after that. Inflation isn't about things costing more. It's about your money being worth less. The official numbers lie. The government tells you inflation is around 2% a year. Sometimes 3%, sometimes 6%, like during the 2021 to 2022 spike. But ask yourself, is your grocery bill only 2% higher than last year? Is rent only up 2%? Are college costs, medical bills, car prices, and childcare rising just a little? No. Real-world inflation, the kind you feel, is often double or triple the official number. Why the difference? Because inflation metrics like the Consumer Price Index, CPI, are adjusted. Substitution tricks: if steak is expensive, people will buy chicken. Hedonic adjustments: that new laptop is better, so it's not more expensive, just higher quality. Exclusions: let's leave out food and energy because they're too volatile. It's manipulation. Because if the real inflation rate were admitted publicly, it would expose the crumbling value of the dollar. And worse, it would force the government to raise benefits, adjust pensions, and pay higher interest on debt. So instead, they hide it. Who benefits from inflation? Here's the part that most people miss. Inflation is not accidental. It benefits certain groups massively. 1. Governments. The US government is $34 trillion in debt, and counting. When inflation rises, it pays back debt with cheaper dollars. Think about it. If the government owes $1 million today, and inflation reduces the dollar's value by 10%, that debt is now easier to pay off. It's legalized illusion. And it's why central banks like the Fed target inflation, not 0% inflation, but 2% or more. They want it. Because it helps them. 2. Banks and the wealthy. Wealthy people own assets, stocks, real estate, businesses. When inflation rises, asset prices go up, protecting and growing their wealth. Middle-class families. They hold cash, wages, or savings accounts earning 1% interest while inflation silently erodes it all. So while the poor hold money, the rich hold value. And in this system, value wins every time. Wages can't keep up. Here's a cruel irony. During inflationary periods, employers are often reluctant to raise wages at the same pace as rising prices. So even if you get a 3% raise, it's meaningless if inflation is 6%. You're technically getting poorer, just more slowly. And the worst part? You work harder. You feel more exhausted. But your paycheck buys less than it did 5 years ago. That's the emotional theft of inflation. Not just money, but dignity, security, freedom. Inflation and the housing trap. Remember from episode 3, real estate becomes the shelter from inflation. And that's why housing prices explode when inflation rises. Not because homes are better, but because people are desperate to escape the dollar. Buy land. Buy homes. Buy property. Because cash is rotting in the bank. But when everyone starts doing that, prices surge. So again, the rich protect themselves. And the middle class is left either chasing inflated assets, or renting forever. The savings illusion. For decades, we were told, save your money. Be smart. Be disciplined. But in a high inflation environment, saving cash without investing is like pouring water into a leaking bucket. It doesn't accumulate. It evaporates. A $10,000 savings account in 2010 is now worth the equivalent of around $7,500 in real purchasing power. You followed the rules. But the rules were designed to fail. Inflation is a tax, without a vote. Let's call it what it is. Inflation is a hidden tax. You didn't vote for it. You can't opt out. It affects the poor more than the rich. And it allows governments to print more money without raising taxes on paper. Because the people would never accept a 10% income tax hike. But a 10% rise in prices? They'll blame the economy. Or supply chains. Or Putin. But the system keeps winning. So what can you do? You can't stop inflation, but you can stop being its victim. Start by owning assets, stocks, real estate, businesses, even crypto if you understand the risk. Avoiding long-term cash holdings, keep emergency funds, but don't let your life savings rot. Getting educated, financial literacy is no longer optional. It's survival. Breaking the illusion, stop trusting headlines. Start watching what money is doing, not what media is saying. The more you understand how inflation works, the less power it has over you. Crisis as a tool, how the elite use chaos to rebuild power. Economic crashes. Global pandemics. Military conflicts. Natural disasters. On the surface, these moments seem unpredictable, shocks to the system, lightning bolts from a dark sky. But dig deeper, and you'll see a disturbing pattern. Crises are not just endured by the elite, they are used. Used to transfer wealth. Used to reset markets. Used to consolidate power. And the most unsettling part? It happens in plain sight. The pattern of crisis capitalism. Let's go back to the early 2000s. After the dot-com bubble burst, the Fed slashed interest rates to stimulate recovery. That cheap money helped fuel the housing bubble of the mid-2000s. Then came the 2008 financial crash. Millions lost homes and jobs. But what did the government do? They didn't bail out the people. They bailed out the banks, the very institutions that caused the collapse. And while Americans lined up at food banks, Wall Street firms like Goldman Sachs and JP Morgan raked in record profits within 2 years. This is crisis capitalism. Use a downturn to squeeze the public, buy assets cheap, and ride the next wave of growth, stronger than ever. Rinse and repeat. COVID-19, a global stress test. The COVID-19 pandemic wasn't just a health crisis, it was an economic reset. While small businesses collapsed, and millions were laid off or pushed into remote gig work, the stock market hit new highs. Tech giants gained hundreds of billions in market cap. Central banks printed trillions of dollars. And the world's richest people saw their wealth double. Amazon, Zoom, Pfizer, Moderna, BlackRock, Microsoft, Google. These weren't victims of the pandemic. They were its primary beneficiaries. Lockdowns crushed the physical economy and accelerated the digital economy, an environment where the few own the platforms, data, and supply chains that everyone else now depends on. And who made the rules? Not voters. Not workers. But a mix of government officials, central banks, and corporate titans, all behind closed doors. Never waste a good crisis. That quote isn't from a conspiracy theorist, it's from Rahm Emanuel, former White House Chief of Staff. And it captures the elite mindset perfectly. In every major crisis, whether financial, biological, or geopolitical, a window opens for pushing through legislation, resetting financial systems, introducing new technologies, rewiring global supply chains. After September 11th, we got the Patriot Act, mass surveillance, TSA security theater. After 2008, we got bank bailouts, zero-interest policies, foreclosure waves. After COVID-19, we got vaccine passports, trillions in money printing, the normalization of digital-only economies. Each time, freedom shrinks and centralized control grows. The central bank playbook. One of the most powerful tools in this process. Central banks. Whether it's the Federal Reserve, the European Central Bank, or the Bank of Japan, these institutions act as economic puppeteers. They control the money supply. They manipulate interest rates. They decide who gets rescued and who gets left behind. During a crisis, they flood the market with liquidity. This boosts asset prices, great for the rich. But over time, it devalues the currency, terrible for wage earners and savers. And when inflation becomes a problem, they hike rates, tighten credit, trigger recessions. And who's positioned to buy up distressed assets again? The elite. Every time. The psychological play. Crises don't just reshape economies. They reshape minds. In panic mode, the average person accepts surveillance, tolerates restrictions, relinquishes control, stops asking questions. Fear narrows the focus to short-term survival, allowing long-term power structures to shift without resistance. It's trauma-based compliance. You don't need a microchip to control a population, just enough fear and a promise of safety. The rise of technocracy. Each crisis also inches us closer to technocracy, ruled by experts, not elected officials. During COVID, public health officials wielded more power than governors. During financial crises, unelected central bankers make decisions with global impact. This shift creates a world where power hides behind expertise, and the people are told, "You wouldn't understand. Trust us. We know better." It's the death of democracy by delegitimization, slow, silent, systemic. Manufactured versus exploited. Now, are all crises planned? Not necessarily. But almost all are exploited. The elite don't need to start the fire to profit from the ashes. Whether a crisis is manufactured, mismanaged, or simply opportunistic, the result is the same. More control for the few. Less autonomy for the many. The crisis is the catalyst. But the outcome is engineered. What can you do? You can't prevent the next crisis. But you can. Stop being blindsided. Watch how power moves, not just what media says. Prepare financially, own assets, diversify income, keep liquid reserves. Strengthen community, isolation weakens resistance. Question narratives, especially those that begin with, "for your safety." Because while the elite think in cycles and decades, the public often reacts in days and headlines. It's time to flip that script. The American Dream Trap: how success was redefined to control you. You were told to follow the plan. Go to school. Get good grades. Take on some student loans, it's an investment. Get a degree. Find a secure job. Buy a home. Work 40 years. Retire with dignity. That's the script. The classic American dream. But what if I told you this dream isn't just broken? It was engineered to keep you docile, in debt, and dependent. Today, we're exposing the biggest myth in modern American life. That success is something you earn by following the rules. Because in this system, the rules weren't made for you to win. The schooling system, built for obedience, not freedom. Let's begin with where it all starts: education. From kindergarten onward, kids are trained to sit still, memorize, follow instructions, raise their hand for permission, take standardized tests. It's not education. It's industrial conditioning. Schools were modeled after 19th century factories, not designed to cultivate critical thinkers, but compliant workers. And what comes next? You're pushed toward college. Not because it guarantees success, but because it guarantees debt. The student loan trap. Today, over 45 million Americans carry student loan debt. Some owe $20,000. Others, $200,000. Why? Because they were told. A college degree is the only path to a good life. But no one explained that tuition costs have outpaced inflation by 300% over the last 30 years. No one warned them that wages would stagnate. No one told them that many degrees don't lead to jobs, just credential inflation in a shrinking middle class. And once that diploma is in your hand, so is your first chain. Decades of debt. And a pressure to stay in any job that helps you make the minimum payments. Freedom traded for a piece of paper. The 9 to 5 illusion. Now let's talk about the job. The 9 to 5 was sold as predictable income, healthcare, retirement security. But what is it today? A 50-hour grind with unpaid overtime. Toxic work cultures masked by ping-pong tables and pizza Fridays. A shrinking ladder with fewer rungs each year. And worst of all, you trade time for money, the one resource you can never get back. For most people, a job becomes not a source of purpose, but a survival mechanism to service debt, pay rent, and stay insured. And if you ever dream of leaving, well, that's when fear kicks in. How will I pay my student loans? What about my health insurance? What will people think if I quit a good job? You're not just earning a paycheck. You're being held hostage by it. Homeownership, the safe investment that owns you. Buying a home used to mean freedom. Now, for many, it means financial entrapment. 30-year mortgages, escalating property taxes, maintenance costs, volatile interest rates, and neighborhoods increasingly owned by corporations and REITs. And what's the narrative? Stop renting. Build equity. Buy now or be left behind. But that pressure pushes millions into overpriced homes, locking them into decades of debt and geographic immobility. Want to switch careers? Move states? Take a sabbatical? Good luck, your mortgage says no. You don't own the house. The bank does. You just pay to live there, plus interest. Retirement, the carrot on a stick. You work 40 to 50 years hoping for retirement, that golden phase of freedom. But what's the reality? Retirement funds are underfunded. Pensions are rare. Social security is uncertain. And inflation is eroding savings faster than most people can replenish them. So what happens? People keep working past 65. Or worse, they retire broke, with stress instead of peace. The system doesn't reward your loyalty. It trains you until you're no longer productive. Then replaces you with someone younger, and cheaper. Success was redefined. On purpose. Now here's the twist. The American dream used to work, when a single income could buy a home. College cost $5,000 a year. Pensions existed. Inflation was low. But as the economy shifted toward debt, speculation, and consumption, the dream was quietly redefined. Now, success is living paycheck to paycheck, in a nice apartment. Driving a financed car. Working a job you hate, just to keep your health insurance. Having thousands of followers, but zero real freedom. It's not freedom. It's camouflage for economic captivity. So why keep the dream alive? Because it works, for them. The elite need you to believe in the system. Chase prestige. Stay busy. Fear failure. Consume endlessly. Never question the rules. Because if you stay in the dream, you don't have time to wake up. And waking up, that's dangerous. It means questioning college. Rejecting debt. Quitting a soul-crushing job. Living below your means. Owning your time. Building real skills. Creating your version of success. And worst of all, for them, it means becoming uncontrollable. Reclaiming your dream. So what's the alternative? You don't need to reject everything, but you do need to stop accepting everything blindly. Ask yourself, do I want this, Or was I told I should want this? Is this freedom, or is this just stability dressed up? Is this success, or a script I never questioned? Because the American dream only becomes your dream when you define it for yourself. Financial self-defense, building resilience outside the system. You've seen the patterns. You've felt the traps. The debt. The inflation. The crisis cycles. The lies wrapped up in dreams. Now comes the real question. What can you do about it? Because here's the truth most won't say out loud. You can't beat a rigged system by playing by its rules. But you can build a life that doesn't depend on it. Today's episode is about financial self-defense. The habits, principles, and strategies that make you anti-fragile in a world designed to extract from you. This is your blueprint to becoming resilient, aware, and dangerous, not to others, but to those who profit from your ignorance. Step 1. Shift from consumer to owner. In a system built on consumption, one of the most radical moves you can make is to stop buying things that don't grow your value. Every time you finance a new car you don't need, sign up for another subscription you don't use, chase the latest gadget for short-term dopamine, you feed the machine. Financial self-defense means asking a simple question before every dollar leaves your pocket. Is this adding to my freedom, or subtracting from it? Start owning assets that appreciate: stocks, ETFs, real estate, small businesses. Skills that compound: coding, marketing, negotiation, sales, writing, design. Habits that generate long-term payoff: discipline, delayed gratification, financial literacy. Because the opposite of consumerism isn't poverty. It's sovereignty. Step 2. Build cash buffers and emergency funds. We talk a lot about investing. But here's the foundation most people skip. Liquidity equals leverage. When you have 3 to 6 months of expenses saved in cash, you don't panic during market drops. Don't have to take toxic jobs or clients. Don't make decisions out of desperation. Cash won't make you rich, but it will buy you time, and time is the most valuable currency of all. It gives you space to think clearly, walk away, pivot, and most importantly, to say no, which is the most powerful word in personal finance. Step 3. Become hard to manipulate. The system thrives on emotional decision-making. Panic sells. Fear buys. Regret loops. FOMO traps. To defend yourself financially, you need to become calm when others are chaotic, patient when others are reactive, skeptical when others are sold fantasies. This means turning down the noise. Turn off 24-hour financial news. Unfollow get-rich-quick influencers. Avoid TikTok traders and crypto pumpers. Information is only power if you know how to filter it. Otherwise, it becomes distraction dressed as education. Step 4. Own income streams you control. A single paycheck is not security, it's risk disguised as stability. Because the moment your employer decides you're expendable, your entire life plan unravels. Financial self-defense means building income streams you control, like freelancing or consulting, selling digital products, monetizing a skill or platform, owning rental property, starting a side business. It's not about being rich overnight. It's about planting seeds today that you own, and the system doesn't. You don't need 10 sources of income. Start with 2. Build from there. Even a small, $500 per month stream can become your freedom fund over time. Step 5. Learn the tax code. Want to know who wins in America? Those who understand how taxes actually work. The wealthy. Pay lower effective tax rates. Use legal deductions. Leverage business entities. Maximize depreciation, 1031 exchanges, capital gains treatment. Meanwhile, W-2 employees often pay the most percentage-wise. Learn to deduct business expenses. Max out tax-advantaged accounts. Separate personal and business income. Understand how corporations benefit you more than sole proprietorships. Don't fear taxes. Learn the rules, and play smarter. Step 6. Build real community. The system isolates people. But resilience is stronger in networks. Financial self-defense also means having mentors who challenge your thinking, collaborating with others building the same thing, learning from people ahead of you, not just influencers, but real practitioners. It's about being in rooms where financial freedom is normalized, not ridiculed. When you shift your circle, you shift your ceiling. Step 7. Prioritize health, energy, and sanity. What good is financial freedom if you're too exhausted or sick to enjoy it? Here's something few money gurus will tell you. Your body is your first bank. Your mind is your first asset. Get enough sleep. Lift weights. Walk outside. Eat whole foods. Protect your mental space. Because in a world of manipulation and overstimulation, clarity is a superpower. And a calm nervous system is better than any financial forecast. Financial freedom is a process, not a purchase. There's no single moment when you're done. This is a lifelong game of simplifying, strategizing, staying grounded. It's not sexy. It's not viral. But it's how you quietly build a life where you are the banker, not the borrower. Where you can take risks when you choose. Work because you want to. Walk away without fear. And no matter what the headlines scream, you're not trapped in panic. You're calm, prepared, and independent. Exit the matrix, living awake in a system designed to keep you asleep. You've walked through the illusions, the interest rate traps, the rigged markets, the inflated costs of living, the false promises of the American dream, the myth of rescue, and the quiet power of ownership. Now, there's only one question left. How do you live awake in a world designed to keep you asleep? Because make no mistake, this system doesn't need you to be evil. It only needs you to stay distracted, comfortable, confused, slightly stressed, slightly entertained, and too busy to ask big questions. Today, we're going to talk about how to exit the matrix, not physically, but mentally, emotionally, and financially. Because once you stop playing their game, you finally get to start playing your own. Wake up from autopilot. Most people live life on default settings. They go to jobs they hate, buy things they don't need, to impress people they don't even like, while wondering why they feel numb, anxious, or unfulfilled. Why? Because they never stop to ask, who wrote this script? Waking up means hitting pause. It means auditing every area of your life and asking, is this mine? Or was it given to me by someone else? Your goals, your beliefs, your fears, even your definition of success. If they're not yours, then you're not really living. You're just functioning inside someone else's design. Escape the system, or redesign your place in it. Here's the truth. You don't need to move to the woods or abandon society. You don't need to become a doomsday prepper or reject every modern tool. But you do need to stop being passive. You need to start becoming a conscious participant. Live in the world. But don't let the world live inside you. Use money. Don't worship it. Use tech. Don't be ruled by it. Use systems. But build escape hatches. That's what true freedom looks like today. Selected participation with full awareness. Master the game, then transcend it. It starts by learning their rules. How credit works. How inflation devalues currency. How the tax code incentivizes ownership. How leverage creates wealth, or destroys it. But once you learn the rules, don't just play better. Play different. Start living well below your means, not to be cheap, but to be free. Build your life around your values, not trends. Invest in your health like it's your only retirement plan, because it is. Turn your mind into a filter, not a sponge. Learn to make decisions from clarity, not comparison. That's how you win. Not by out-gambling the system, but by becoming unshakable no matter what it does. Kill the noise, protect the signal. You want to know why most people stay stuck? Because they drown in noise. Scroll. Swipe. Click. Repeat. 24/7 news cycles. Financial fear porn. Opinion overload. FOMO addiction. Never enough, never now, always chasing. But if you want peace, clarity, freedom, you have to protect the signal. The signal is your intuition, your values, your truth, your rhythm, your curiosity, your mission. Turn off the noise. Tune into the signal. That's where your real life begins. Freedom isn't a destination. It's a discipline. Living awake isn't about arriving. It's about practicing. You'll still get distracted. You'll still make emotional money decisions. You'll still feel pulled by the world. But the difference? You'll notice it. And that awareness is power. Freedom is not one giant leap. It's 1,000 quiet choices. Choosing to learn instead of scroll. Choosing to save instead of spend. Choosing to move instead of numb. Choosing to pause before reacting. Choosing you over approval. Choosing the long game over the quick win. That's how you exit the matrix. By taking back your choices, one by one, day by day. What does a free life look like? It doesn't look the same for everyone. But it usually has these elements. Time ownership, your days aren't dictated by others. Geographic freedom, you're not trapped by a job or rent or lifestyle pressure. Emotional sovereignty, no one can hijack your peace. Mental clarity, you think for yourself, not through someone else's narrative. Financial resilience, you're not rich, maybe, but you're not scared. Purpose over productivity, you build, create, contribute, because it feels aligned. This isn't fiction. People are doing it. Quietly. Boldly. Imperfectly. And now, so can you. The final reminder. You were never meant to be just another consumer, voter, taxpayer, debtor, employee, or algorithm target. You were meant to be sovereign, curious, awake, disciplined, free. And even if the system was built to keep you asleep, your awareness is the glitch they never planned for. So take the red pill. Not to escape reality, but to finally start creating it.